Hi guys, welcome back to my channel. Today in this video, we will learn how to prepare the cost reconciliation statement in Excel spreadsheet. So before I start to show you the preparation of this statement, I would like to tell you that we learned a lots of reconciliation statement in the last different series of video. If you have not watched it, then please watch that videos, link in the description below. Now let me tell you some additional information related to this before I start to prepare this statement. Okay, alright, we already know that there are basically 5 steps for reconciling any statement like cost reconciliation statement, starting with the bringing the statement and ending with the calculating the closing balance of the second statement. Right, under these 2 steps we have 3 additional steps, that is these 3 things. We can see that we already discussed about these steps in the previous video, so here we don't spend more time on this section. Okay, if you don't know, then please watch the previous video for this section. Here I am going to directly jump under these sections, that is the rule for debit and credit or add or less section of this statement. Alright, so basically under this statement we have the 2 statements, that is a financial account statement and the cost account statement, right? So based on these 2 statements we have some rule to adjust the adjustable transaction in the form of add or less, right? So first one is, if the financial account is given, then calculation should be based on cost account. Similarly, if the cost account is given, then calculation should be based on financial account. And let me tell you one thing here, financial account is also known as profit and loss account. Alright, okay, now under both condition, that is this and this, we have further the conditions to apply the add or less rule. Okay, so the first one is, if the profit is in cost account, then it should be added, that is we should understand that loss in the financial account. Similarly, if the loss is in the cost account, then it should be less, that is we should understand that profit is in the financial account. Similarly, under the cost account we have the further 2 conditions. The first condition is, if the profit is in financial account, then it should be added, that is we should understand that loss in the cost account. And if the loss is in the financial account, then it should be less, that is we should understand that profit is in the cost account, right? So there is opposite relationship between the financial account and cost account, you can see that. Alright, and we have some additional 2 notes. Okay, so the note number first is, if the closing balance is in negative, use the word loss, otherwise profit. Okay, we already know that. It is also known as the net loss or net profit. And the note number second is, if the first statement start with financial account, then it will end with the cost account. Similarly, if the first statement start with the cost account, then it will end with the financial account. All right, okay, so based on this rule or the current understanding of this statement, let's start to prepare the cost reconciliation statement. Okay, alright, here we have a 2 statement, that is the cost sheet and the trading and profit and loss account. The cost sheet is also known as a statement of cost, and trading and profit and loss account is also known as simply the income statement or profit and loss account, right? Okay, under these 2 statements we have a profit or net profit. You can see this one. All right, so this is the closing balance of both statement. Okay, so based on the available closing balance and the other component of the statement, we should first identify the adjustable transaction in the form of unique, duplicate or any error transactions by identifying from these 2 statement, and then we will adjust those identified adjustable transaction in this format. This is the format of the cost reconciliation statement. Under this format we have 2 sections, that is add section and less section. In these sections we will adjust all those adjustable transactions after identifying from these 2 statements in this section. Alright, based on the calculated statement, right? The calculated statement means whichever the statement we will start with, right, the opposite statement will show here, and that opposite statement is our calculated statement, right? So based on this statement we will adjust the add or less section. Alright, now according to our step, first we have to decide the first statement from the available statement. So we have a two statement, and from these two statement I am going to randomly select this statement as a first statement. It doesn't require the sequence. You can select this one as well. Alright, so here I am going to select this one and put the value of net profit here. Alright, by writing the statement like profit as per financial account. Why? Because this value is greater than 0, right, and showing under the profit and loss statement. So that I have written this statement, right? If this value will show in the negative form, then we will use loss as per financial account. Okay, so for under this condition have a net profit, so we have written this statement. Now let's put the value 12,000. Now press the enter key. Now click here and let's write the opposite statement here. All right, so here we will find this profit, so we have to write profit as per cost account. Now press the tab, and here we will calculate this balance after adjusting the add or less section. All right, okay, now to adjust or put the adjustable transaction under these sections, we have to first identify the unique, duplicate, or any error transaction from these two statements. All right, so first let's identify it. Alright, we found 3 unique transactions under this statement and 3 unique transactions under this statement. Alright, we have to adjust all these transactions on the basis of this account. Alright, so first click here and just review the first transactions, that is this one. The value of direct material is showing 50,000 rupees, but we can see that the direct material is showing the 40,000 only here. That means this value is over the value, right? Over value by 10,000 rupees. So we have to follow this account because we have started with the finance account. So based on this account, this value is showing over value by 10,000 rupees than this one, which is the cost or expenses or loss for this account. So it should be put under the less section. So click here and write the statement direct material is overvalued, and now press the tab and now put the value of 10,000 rupees. Here we have to put the differential amount, right? Okay, now the second unique transactions we have factory overhead, which is the 25,000 rupees, and you can see that here the factory overhead is 40,000 rupees. That means undercast in this statement. Why? Because we have to follow this statement. So based on this statement, that is this statement, the value is showing undercast, which is a kind of profit for cost account. So it should be put under the add section. So here and write the statement factory overhead is undervalued. By how much? We have to put the differential amount, that is from 40,000 to 25,000. It will come 40,000 minus 25,000. It will come 15,000 rupees. All right, okay, so we have to put here this one. Now we have the third unique transaction, which is selling and distribution expenses by 12,000, and this value is showing here by 15,000. That is, this value is showing our value. That means this is a kind of profit for cost account, because we have to calculate based on this account. So this is a kind of profit for this, so we have to put this transaction under the add section. So click here and type the statement selling and distribution expenses is undervalued in cost account. Now press the tab and now put the value how much, 15,000 minus 12,000, which comes 3,000. Now press the enter key, and here I'm going to add the account name. The factory overhead is undervalued in which one? Cost account, and the direct material is overvalued in cost account. Now press the enter key. Alright, now let's add these transactions to close the add section. So click here and now press the equal to sign, type the sum function, and now select the range from here to here, and now press the close parenthesis and now press the enter key. Alright, And now click here and now press the equal to sign, write the sum function, and now press the tab and now select the range from here to here and now press the close parenthesis. Now before pressing the enter key, let's click here and put the negative sign here to show the value in the negative form and press the enter key. Alright, now let's add all these three values to get the balance of the cost account, and that can be done by using the sum function. So tap the sum function, now press the tab and now select this one, comma this one, comma this one, and now press the close parenthesis and now press the enter key. And now you can see that we got the balance, this one, which is 20,000 rupees profit as per cost account, and you can see this value is showing here. That means our calculation and preparation is correct, right? We successfully found this balance here. All right, and you can see that this balance is showing this one here. All right, so guys, it's a very easy to calculate it. That's all for now. Thanks for watching this video. If you find it useful, please hit the like button and don't forget to subscribe to this channel. See you in the next video. Signing off.